Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host for the day, Nick Theodorakis. But let's bring in our next guest for our cash tag segment, and that's Andy Swan, the co-founder of LikeFolio. Thanks for joining us, Andy.
Yeah, no problem.
All right, so we're talking Starbucks. Shares are down over 20% so far this year. It's had a tough run here. They've got the old CEO coming back in, but as far as data points goes, has the inflationary pressures hurt this company? Because it seems like they continually raise prices. They've got unions starting. What kind of data are you guys seeing on Starbucks? Because, you know, it seems like the analyst community is still positive on this stock, even though it's slid pretty significantly over the last several months.
Yeah, I would say the way I would classify our data at LikeFolio for Starbucks is hanging in there. You know, it's not blowing the doors off. It's not falling apart. It's really kind of hanging in there. There's some macro trends that are really benefiting Starbucks right now. The returning to office, you know, is up 74% year over year. So we see a really big contingent of people returning to the office, and with that comes a little bit of an enhanced need for that caffeine fix. We've seen, you know, consumer macro demand for caffeine consistently increasing year over year. This year, no exception. Just a really, really strong trend to the up and to the right in terms of people wanting that energy boost as they get into their day. Starbucks provides that. And the other thing that we look at when we talk about Starbucks, we always want to look at it in terms of it versus competitors. Strongest competitor, clearly Dunkin' Donuts. And I was actually surprised to see Starbucks beating Dunkin' Donuts from the perspective of demand growth as well as consumer happiness. So they're delivering on both metrics better than their competitor, which is always a positive. And so, you know, overall, I think, you know, Starbucks has taken a haircut stock price wise that probably needed to happen. It got a little ahead of itself. But, you know, as consumers return back to the office, Starbucks is in a really good position to continue to increase those total ticket prices and create an even more addicted customer than they already have because they're one of the best in the business at that.
Always love seeing the caffeine fix stocks on here. I have not stopped drinking coffee, just so you know, being at home. It hasn't changed my habits at all. I think I drink more, but watching the coffee futures a little bit, the KC, they're down about 15% off all-time highs. Still pretty elevated, but you know their main input has come down a lot. What are you seeing in terms of, you know, customers' ability to absorb that pricing? And do you think they're going to have to lower prices back down to kind of keep this going? Or, you know, assuming coffee falls like this, or is this just like straight to the bottom line if they've raised prices the way they have and then coffee futures fall?
No, I think it's pretty much straight to the bottom line. We haven't seen evidence yet that the Starbucks consumer is at a breaking point price-wise. I think this is a known luxury that people know they're paying a little bit more for. When they stop, they could easily, you know, brew something at home much cheaper, but they prefer the Starbucks experience and they're willing to pay up for that. And they've been able to absorb those price increases pretty well. And Starbucks has done a good job of diversifying their menu to allow people to buy more things and increase that per ticket revenue. So overall, I think that coffee dropping from this point is purely a bottom line play for Starbucks because those customers, as far as we can see so far, aren't going anywhere. We don't know how close they are to the breaking point, though.
Yeah, by the way, Nick, Starbucks never lowers prices. You should know that more than anybody. And total disclosure, about 15 years ago, when I was still down on the trading floor, I watched coffee futures all the time, was trading them a little bit, and I sent an email to the company and said, hey, coffee futures are at 7-year lows. When are you going to start lowering prices? Because they always had that little note there on the counter that said, hey, we're raising prices because coffee futures were up. And I just got that complimentary reply back. But Andy, when you look at this data, and you mentioned the comparisons with Dunkin' Donuts, right? And then I always look at McDonald's, right? McDonald's makes a lot of money on their breakfast and their coffee products because the input prices are so cheap. with the rising wages across the board, the unionizations at Starbucks, will that just offset maybe the lowering prices of the natural resources that they need for their products and help their margins? Because growth here in the U.S. has been supporting them because they've had some troubles overseas in China, but they've got 35,000 stores. This is about scale and the ability to hang on to those consumers that want to buy this luxury drink product. But your data is not showing anything, and it's still better, according to your data, as far as Dunkin' Donuts and maybe even McDonald's on the breakfast side?
Yeah, absolutely. It's still better. I do think that you bring up a really good point, though. Starbucks has an enormous cost in labor and in the healthcare that it provides to employees. And so that a lot of times even dwarfs what they spend on the coffee beans themselves. So it's kind of an interesting situation for the company. And then from a global perspective, LikeFolio's data is about English-speaking consumers. And so what we don't capture is what's going on in China. And now China's kind of starting to admit again that COVID exists inside of their mainland and is having some lockdowns in some regions. I think that there will be some interesting insights into the entire Chinese economy through what we hear from Starbucks. So we'll be paying attention to that very closely over the next few months. But overall, I think Starbucks delivers a product that is somewhat addictive that consumers really like, and those are the types of companies we like in inflationary environments where people have to start making tough choices. They're going to generally cut the things that make them the least happy, and Starbucks is fortunately on the other side of that line.
Starbucks definitely does make me happy, especially when I'm tired, like today. Yeah. But Andy, if you looked at this and the discount that you're seeing in the shares is down 22%, so your data's pretty bullish on this name, especially after the slide that we've seen.
Yeah, I would say it gets more bullish every dollar that the stock price drops. Overall, we're kind of neutral on the company, but neutral can be good in an environment like this. And so this is one that I put on my watch list and say, if you get a throw the baby out with the bathwater type of market event, Starbucks is one of those names I would want to pick up in that situation.
Definitely, and I think a lot of people did about 3 weeks ago when this stock got under $80 a share. That's for sure, because it's had a nice month, nice rebound of about 5% so far this week alone. All right, Andy, great stuff as always.
Hey, thanks, guys.
All right, that's Andy Swan, the co-founder of LikeFolio.com.